Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It is March 25th, 2023. It's our weekend update, and we are declining into a daily cycle low. If you're not following on Twitter, take a look at the pinned comment for a link. I've been mentioning this on Twitter. It's very clear now. This was March 3rd. We had that it was a Friday, big up day. That was our daily cycle high on day 7. If you're not familiar with cycles, take a look at that pinned comment. Scroll down to the bottom. You'll see a playlist for Cycles 101 and also important price action signals like a swing high and a swing low. And so specifically, this is your daily chart, natural gas. This became a swing high. This big up day, again, March 3rd, once we went below the low of this candle, which marks the high, and that's at, the low of this candle is at 2.772. There's obviously different levels for Boyle and UNG, which gapped down since they don't trade overnight, whereas this didn't. But it's the same idea. And if anything, on this channel, the focus is on preventing large losses. If you learn anything, it's that. It's mitigating those big, devastating losses. And understanding how to recognize a swing high is one of the key ways to do that. Now, just because we broke below the low of this candle doesn't mean we couldn't come back and make a higher high, obviously. But the point is to understand when the price action is telling you there may be heightened risk. And so since that swing high, we can see we've just been making lower lows and lower highs, which is, we can kind of quibble about, call it here and then there. Now, we've been trading in a little bit of a range for the last, call it 4 days. And so you can imagine that might be building up some energy to make a lower low here. And of course, this is your daily chart. But I've been saying as well, the really important signal is on the monthly chart, where we are on pace to make a bearish outside monthly candle. Boyle has already done that. I'm not sure if UNG did. Actually, let's take a quick peek. Let's see, did UNG make it? Wow, not yet. That's interesting. So the low from last month, so this is UNG. The low from last month is $7.14. That's the low from February. And so far, we've gotten to $7.16, so just 2 cents above. So that is tantalizingly close. That gives you a little bit of a preview of what natural gas is likely to do. So again, makes a higher high and then goes red. So this was a green candle at one point. Then it goes red, makes a lower low. This was your last example. That was in June of your last bearish outside candle on the monthly chart. Let's go back to natural gas itself. And again, some important features here, or like important details. This rally lasted for 7 days, and so far the decline has lasted for 15 days because we are on day 22. That's the way to think about that, right? Like this period here, like you have this little 5-day rally, and then this massive 47-day decline. So this period here is 52 days, just as this is 30. And that's around 33. So if we had so this was a really long daily cycle. If we had a more normal daily cycle in the 30-ish day range, let's just, scenario planning here, maybe that gives us a low around, call it the beginning of April. And so that would be another 8 trading days of decline to make it about a 30-day cycle. And again, remember, it topped out on day 7. The way to think about that is the rally lasted for 7 days. And now we're going to see how long this decline lasts. And obviously there will be bounces along the way. But at this point, we also just want to be clear that we could get a daily cycle low at any point, right? So we just want to be careful. Like, we've had short daily cycles as well, like this one here, like 24. And even if it's not a full daily cycle low, it could be a little rip of a rally. Like, let's say even up to like, what is that? Like 2.67, something like that. So it's getting later in the daily cycle, which is to say. And if we think about the weekly, that's actually really important. Like the implications here, because we had this weekly cycle that was the last bullish weekly cycle that we've had, where it rallied for 23 weeks. Right, so think about that daily cycle idea. It's the same idea as the weekly cycle. This is just more important because it's a higher time frame. The rallies and declines will literally last longer. So in this case, again, we rallied for 23 weeks, and then you have a really shallow decline into a week 26 low. Or I should say, short decline. It's not shallow. What was this decline here? From this swing high to this swing low, which is how you're always measuring it, was 44%. So that's a decent decline. I mean, we've obviously dropped more like 70% in this time. But then you have your first bearish weekly cycle where you rally for only 7 weeks and then you decline for 11 weeks. Then you make another even shorter rally for 4 weeks and then a massive decline for 12 weeks. Now we had literally 1 week up. Like, notice this candle doesn't make a higher high. So that's potentially let's say a weekly cycle low on week 16. And you're like, oh, we have a swing high. We closed as a swing high. Oh, excuse me, a swing low. We closed as a weekly swing low. So this was your candidate for an ICL, a week 16 thing, just like this. But then obviously we've broken lower. And again, I pointed this out in other videos. These are important signals. When you're making lower lows on the weekly chart, well, I mean, so this candle makes a lower low, closes below this candle here. We'll zoom in. And then the next week, you close below the low of this candle. And then we just close below the low of this candle. Now, again, nothing to rule out some kind of bounce, like, something like this even. But this has all the trappings of something that is at least going to try to test that bottom. If not, make a lower low, a new all-time low. And again, of course, UNG and Boyle are leading this thing. Let's jump over to UNG. We'd already looked at the monthly chart. It's literally 2 cents away from making a new all-time, or at least retesting that all-time low. And again, you can see this is just a daily version. This is what we talked about. I'm going to just get rid of these drawings. You can see, and this line here is your 10-period moving average, if you needed that for further confirmation for whatever reason. But you can see that was your big up day on that Friday. And then once you broke below this low at 925, that was your swing high. The only problem is you never really got a chance because it was a gap down opening. Yet at the same time, notice that following day, it actually made another higher high. Or it made a higher high above this high, I should say. But in the grand scheme of things, it's a lower high. Like this is your low, that's your lower high, and then your lower low, lower high. I'll get the drawings back on, but I mean, pretty clear, right? I mean, look at that, right? So we do this. We go down, we make this little fake out lower high, and then we just kind of cascade lower. A convincing little, and this is actually looks like, okay, maybe it's a double bottom, another lower high, another lower low. And now we've been, and as we talked about for natural gas itself, we've been consolidating for the last few days. And so a consolidation pattern at some point is going to resolve to either the upside or the downside. And so the likelihood is that this is essentially just a bear flag building for a dump lower. You can't rule out the idea that it doesn't serve as a bottom, but it will be really clear in real time what we're doing there. And so that's UNG. And as we talked about, Boyle has already made that lower low, and it's doing something that's incredibly bearish that you want to make sure that you're paying attention to. Okay, so this is your daily chart of Boyle, and this one has closed at a new all-time low here. So $4.07. That previous all-time low was $4.34. But even more important, notice these last 2 candles on the daily. So this candle is obviously just an inside candle. It doesn't make a higher high above here, but it also doesn't make a lower low. So it's just inside. That's your Friday candle, but it was red. Your Thursday candle is also red, making a lower low below that previous candle. But all these 3 candles are all just an inside candle of this bullish outside day. So we had a bullish outside candle. Again, that's obviously the opposite of the bearish outside candle that we made on the monthly chart. Not to confuse folks. Look, this is your monthly chart. As you can see, we have closed below the low of the previous month's candle, right? So we've closed, and so to be clear, I should say on the weekly candle, we still have another another week to trade, and so we'll see if this thing can climb back above 423 or 434, excuse me. But we've obviously closed on the weekly appreciably below that, and if we think about, and again, looking at that daily chart, the last 3 days have just been consolidation inside this candle that, like, in real time, look like, oh, is this thing trying to set a bottom? Clearly, it's still undecisive. But most importantly, look at that low from 434. And I always talk about the fact that, people are like, oh, wait, lines on a chart, and like, just relax, calm down. Candles are a visual representation of a price range, right? And so look, that's all they are. They're nothing more, nothing less. Look what's happened the last couple of days, right? Price has gotten almost back to 434 and then failed. Almost back to 434 and then failed. That's the wick here. That's price rejection on a lower time frame. If we look at the hourly chart, for instance, you can see that, this wick here, no, this wick here, no. And we close as a swing high on the hourly chart here as well. That's important. That's just literally a visual cue that price is now the previous all-time low is now essentially resistance, supply. That's important to know about. I mean, look at that. This is that level on the hourly chart. So that becomes an important level, getting back above 434 convincingly, and potentially holding that on the ups on some kind of back test. So that's really important. You're going to watch for that same kind of pattern in UNG, right? Like, again, Boyle is front running. It's giving you a clue as to what is to come. And so that's your level on UNG. Again, we haven't broken below it. We're like literally a couple cents above it. But you would expect at some point we break below that, and then this level becomes something like a bit of resistance. But we know that the daily cycle for natural gas, we could be getting our low in early April if we get something like a 30-day cycle. So at this point, it's all about patience. As we talked about many times, April is the winningest month for UNG as a proxy for natural gas, and so it's not. I think it's not a coincidence that we may get a daily cycle low right around the beginning of April, which would set up for a bullish April. Again, maybe even a green, April candle potentially. And so that's the lay of the land for natural gas itself. We looked at Boyle, we looked at UNG. Let's take a quick look at LNG, which is a natural gas producer. And so that we determined was in daily cycle decline as well. Let's see where it stands. So daily cycle high here on day 8. And if we okay, so that's day 8. We have this low here so far on day 17, and we're on day 23. So assuming this little low here on day 17 is not your, daily cycle low, we would expect that we break below that low here, which would take us below this previous daily cycle low here, which we already went below. You did have a violent reversal up, but now it's a question of, was this kind of a fake move? So this is going to be an important one to watch, especially since, again, we talk about the implications. It's been rallying for 32 months, a massive, really long rally. There's no reason why we couldn't get a multi-month decline here. Maybe it doesn't do a ton of damage. And notice it's already done. It's already, like, this is a great example. This is a bearish outside monthly candle, but it's now reversing a little bit. So if that daily cycle low fails, or the daily cycle fails, I should say, that obviously is going to make this monthly candle even more red and set us up for, a potential sort of follow-up in April. So that's going to be, but yet at the same time, if natural gas is rebounding in April, it's going to be interesting to see how this sort of correlates. So that's your update on natural gas and LNG, which is Cheniere Energy. Thanks for watching.